But anytime you have an event like this, which happens less than once a year, where the market drops this much, immediately what happens is the market becomes in play. And what that means is our normal techniques of looking for individual stocks with fresh news catalysts, that kind of gets tossed to the wayside because the market itself becomes so volatile and so in play that it overrides kind of all those other setups. And so one of the things about when volatility is low, like it was here, is if you have a good short setup, it's going to trade cleanly. If you have a good long setup, it's going to trade cleanly. Once the market becomes this volatile, these setups, individual stock setups, are going to get moved by the market, at least a lot more than they normally would. And so you should focus on the market itself because it's going to be the leading indicator of these other individual names. The only names that we tend to look at during this time period are the market leaders, because when the market gets crushed, what do people do? The first thing they do is they look to put some money. Ones who are panicking and getting pushed out by their brokers on margin calls are looking to buy market leaders. So when we look at the morning sheet now, we're in play. We have the indices and the volatility ETFs. And for second day technical, we just have a list of the market leaders across different sectors. They tend to be technology. Actually, looking at all of them, they're all technology. But these are going to be the ones that people go to. And obviously, technology has been the strongest sector and got hammered the most yesterday. That's actually good for the market. For when the leaders get hammered, they're usually the ones that hang on the longest. They're the strongest while other things are getting hit. When the market leaders get hit, then you're closer to capitulation. So the last time we were in a period like this is right here. I'm not anticipating we have as large a down move as we did in February off the top, but certainly something like similar to the double top back in March when we came off from 280 to the high 260s here. And then we had the second leg here into the 260. It's something like the high 260s. I'm talking about not necessarily today and tomorrow, but like into next week. Something into here. And that's kind of how I'm going to play it with options. So when the market's like this, we're playing move to move. You probably already saw I sold SPY and shorted into the after hours resistance before the morning meeting into here. And we have a range to work with. And so you'll see guys getting in and out more quickly. A lot of you are going to be confused. It's okay to do less. For those of you who normally are already scalping very quickly, if that's your trading style, you'll probably feel pretty comfortable. Understand, though, when you're normally scalping for 20, 30 cents, you'll probably be scalping for 60, 80 cents a dollar now, because that's the volatility that you're going to be seeing. Let's take a quick look at what we've already seen in the SPYs in the pre-market. So this morning we were down at 274. I thought yesterday when we were at 277, drifted to 276, a gap down at 274.75 would be a nice spot. We had it, but unless you were kind of prepared to buy in the pre-market 6, 7 a.m., you weren't buying down here. By the time the institutions came in at 8 o'clock, we were at 76, kind of at the bottom of the after hours. We bounced here. I sold, I shorted. I was hoping to cover back down into 276, and then we'll kind of see. Upside is to here, but certainly shorting into this made sense on the first try, and shorting into 278. There's going to be some people looking to definitely sell into the market being flat on the day. So I'm just, the SPYs right now are, well, that's not right. So that was a print from yesterday. I was like, the SPYs are flat? No, they're down like $1 and change. But yeah, people are going to be definitely looking to sell into this. We've got a really good working range here. Just understand, you're going to take some losses. Try to keep the losses as small as you can with giving them room, because normally on the SPYs, maybe you only give it 5, 10 cents of risk, but with elevated volatility, you really need to give it 20, 30 cents. You'll capture 50 cents to $1 a bunch of times intraday. And maybe even if we get an extreme move, like back down to the pre-market lows, you'll play it for like a $2 to a $3 up move. Or if we get up to 279.5, 280, you'll short it and you play it for like a $2 down move back to 278. And so those are the general things. Let's take a quick look at Qs and VXX. So on the Qs, this kind of just broke through the technical support into the close. So you had this here, you had 178. It took that out, and then after that, you had this pullback low around 175. So all that stuff is taken out. So now we're down in this area right here, which is kind of important. The way I look at it is 169 to 170. And so I mean, this to me is a pretty good spot in the Qs right here. It was the pullback low from late June. Obviously, if that fails, you're then looking at nothing to 166.5, 167. But if people want to get back into technology, you're looking at a move back up to 173, and then potentially 175.
So that's did you just share that with Brad on the side? It was shared.
So you can kind of see people were buying it in this support area in the pre-market. And so now what people are going to look for is, does it make a higher low? Again, the technology let things down. Can it lead things back to the upside? I'd be looking for a play, certainly from here to here, and selling some into this, but I'd look for the bigger move back up to here. And then VXX. So the thing about VXX, it's people are generally trading it on the opposite side of the market. So if people are getting long the market, they're getting short VXX. Some people prefer to trade it and get long a bounce. Psychologically, they like to be short things on our desk, especially. And so they'd rather. And the other thing about VXX, it is mean reverting. What that means is it doesn't trend the way that stocks do. It actually, so if it has a move like this, and it goes up again here, in the next week or so, it's going to come back down to here. It's just not going to keep on trending higher. The best way to look at that, let's just see. So what I mean by mean reverting is it just, after putting its kind of a lower high here on the second down leg back in, was it March? It just very quickly came down. And if you were shorting, into the here, and then you caught this down move to below 50, historically speaking, well, pretty much every time, once you catch this double top here and it comes off and starts to hold, you can pretty much hold it all the way back down to here, to where it started from. So now we are. So that's bigger picture. But from intraday, what do we have to work with? Okay, so we have 35 as the pre-market where it took out and then reversed. And we have 33 coming to the open. So one of my favorite plays actually in VXX is when it starts coming off like this, is they'll flush it on the open, maybe all the way down into this area right here. And you just get long it for a move back up to 33.75, 34. You're buying into here, you sell a little bit here, and you kind of look for a play back to here. And then look to see if it can make a lower high. Kind of fail at the end of yesterday's close. I will, if I have time in the next, I'm probably going to cut the meeting after this. I'm not going to even talk about the market leaders. I have a good filter for this market environment where it looks at the market leaders intraday if they get a standard deviation away from their VWAP for potential fade situations. And if I can get that set up with a join me, I'll share that window with you, a link in the chat. So that's it. All the market leaders, I have them labeled, the support levels. Generally, a good rule of thumb is if they flush below those support levels, and then they can get back above them and hold, those are potentially a good bounce play. And the AMD was already showing signs earlier. I bought some in the after hour. I mean, I had some into the close, and then I bought in the after hours at 24. Already sold some into this up move. Just looking at it, it's acting like it's going to work its way back up to here. So 25.40 to 25.80, something like that. It has come off 30% now from the top where it seemed like a great short, and it was. But it's right back down here. So it's pretty good. It hasn't quite caught up to its longer term uptrend, but it seems like it's going to bounce up to here today, and we'll see. As always, be patient and good luck.